Good afternoon, friends. Hope you had a good lunch. I will be speaking on the topic of multi-time frame trend and multi-time frame relative strength. It sounds a pretty simple topic, but it can be most useful concept which will help you to identify assets, markets, sectors, stocks, and finally you boil down to your trading strategies or investment strategies. As a trader, as an investor, one has to know whether are you into the trended markets or not. Because for me, technical analysis is easy in the trended market, but many traders, investors who are following technical analysis find it very difficult to get in the momentums and get in the trend. So technical analysis is easy in the trended market, but difficult and psychological, very difficult to get into the positions. Because you might identify a stock at the bottom in a good position, good setup, but you may tend to leave the stock halfway down, and you might find the stocks like Aurobindo Pharma moving from 350 to 700, 700 to 1100, and so on. And there are very several stocks which have done that in last 1 year. So the purpose over here is to first identify whether we are into the right markets or not. In terms of talking about the world indices, from that angle we can start, or for that matter, whether you should be in the equity markets, commodity markets, or forex markets at a particular point. So for me, relative strength concepts helps you to segregate where you have to be. And then you boil down to be in where you want to trade or not, as a trader or an investor. So the purpose of relative strength, which is called as RS, many people would be aware of it, but different analysts have the different ways of coining it and creating it. So sole purpose is to identify demand supply, obviously, but we want to know whether we are into right assets or right world markets or sectors, and finally, are we into the right sectors? So the money flow can be identified or can be visibly seen on the charts which are outperforming, basically to find out the outperforming markets. So in current scenario, if you see that, we all must be aware that Hang Seng, Nikkei, super breakouts have already been witnessed, and that's where the outperformance is being seen. Even people who talk about funds, Reliance Japan fund is the outperforming funds in last 3 months with 18% return, whereas equities are not doing that. So now we have the facility of various funds also having international exposures. So where the money flow has to go as an investor, whether we should shift or allocate some funds in that sector or not, we can easily able to identify. Right? Recent moves of metals in MCX market or even in LME markets, a very good bottoming out process has been witnessed, and we have seen the MCX rallying, zinc, aluminium, very smart rallies after a few years. So that is a time where you have to be in those commodities or those stocks, as the case may be, to make good money. If you are trading in futures market, your moves has to come in the shortest possible time without any gestation period. You don't have time to wait. We don't have time to spend in the corrective markets and very complex structural patterns to waste time, basically, if you are typically a hardcore trader. So how do we do that, actually? So it's very simple. Relative comparative strength, those who are using various softwares, all these facilities are already available, whether you're using Metastock or any other software. Relative comparative strength, asset divided by the benchmark asset, or stock divided by Sensex, USD INR divided by Sensex, Dow Jones divided by Sensex, gold divided by Sensex, and bonds index divided by Sensex. So whether the money has to, if I'm benchmarking India as a market, then I need to understand whether money flow is happening here or not. This is on a standalone basis at a point of time. So we need to compare it in a period of time. So if Dow Jones is doing better than the Sensex, whether the money has to be here or not, whether USD INR, whether you have to be in USD or not, or whether you have to be in gold or not. So as a trader, you need to be very flexible, because there are limitations of just watching one chart. If you're a commodity trader and you're watching gold, silver, for a prolonged time, there's hardly anything has happened. And in that situation, should we waste time in that as a trader to be trading in that and getting chopped out in the complex corrective structural patterns? If you talk about gold, you can see a pretty double combination happening with a probably second leg getting into some kind of a triangular mode unless 25,000 on the MCX prices gets vertically violated. That is a different story. Otherwise, we are getting into consolidation and a concession into a wave E kind of a structure. But should we waste time in that or not? We might be knowing the best of the ways of doing analysis and probably best techniques are available on hand. But whether we should be in that asset trading and wasting time or not, that has to be assessed. So RCS is a comparative pair which is there, stock derivatives as you can see on the screen. But we need a rating from 0 to 100 to actually define whether we should be there or not, whether the rating is higher against your benchmark or your asset or not. So basically, to get a 0 to 100 rating, I am using basically RSI. Okay, F5, okay, sorry. Okay, just a quick recap, which I spoke just now. It is not come. F5. Okay. So what is RS? RS is basically an asset. You can have a stock divided by Sensex or USD INR, Dow Jones, gold. Any assets which you want to trade, you benchmark it against the respective commodities or whatever you want to do it. Then we probably put that value which comes across into the RSI component of the formula. By default, RSI is just a closing price which you are taking, but instead of we are taking this ratio to be incorporated into that. And obviously the formula works like average gains and average losses, and then we get an RS as a component in a normal RSI functioning. So instead of that, we are probably going to be a derivative of the price of the indicator. Basically, it's a derivative of indicator. So if RCS, how does an RCS or RSI of RCS works? The three instances whether you will gain strength and three instances whether you will lose strength. You gain strength when your stock or your asset moves very fast than the benchmark. Then your relative strength of your respective asset moves up, or a commodity or a stock moves up. So if your stock goes up faster than the benchmark, relative strength goes